Good morning, everyone. It is Thursday, January 21st, and we here at Harvested Financial are looking at the markets and what is going on. So before I get into that, I'm going to share my screen briefly and talk about some disclosures that we have here, and that all of the information, commentary, and opinions expressed on this or any other websites or on any other social media platforms or in any media reflects the personal opinions, viewpoints, and interpretations of the employees providing such comments, are not to be considered a description or offer of financial advisory services by Harvested Financial. The opinions expressed are for general informational purposes only and not intended to provide specific advice or recommendations for any individual on any specific security or investment product. It is only intended to provide education about the financial industry, and in no way is any content on this website meant to convey investment advice, performance data, or any recommendation to buy or sell securities. Harvested Financial employs multiple methods of analysis and security selection to create our client portfolios, which are not discussed in their entirety here. All investments carry the risk of loss, and users should discuss any decisions with their financial advisor. Past performance is not a guarantee of future results, of course. So now that we have that out of the way, let's talk about what's going on today. Well, we have another drift up. I'm looking at SPY, and it is up about a quarter, 22 cents, 6 basis points. Barely a drift, if we want to even call it that. Apple's up 2%, though, bringing the Qs up about 93 cents or 30 basis points. And Tesla is down a hair, which is actually going to be the name that we're going to be talking about today, because they have some pretty interesting things going on next week with their earnings announcement. So I want to look at a couple different ways that we can play Tesla earnings using two different butterflies. So here I'm going to go ahead and share my screen again, pull up my trade hawk for everyone, so we can really see what's going on in Tesla. And actually, first, I'm going to go ahead and pull up the chart, the historical chart. So what we're looking at here is, with this yellow line, has been the stock price. So since November, it's trading around 400 a share. We're up around 850. We're sitting right in this zone right here. Hasn't done much over the past month or so, but we're sitting very close to some of these all-time highs. This white line that I'm looking at is going to be the implied volatility. So implied vol has consistently tended for the last good period above this red line, which is the historical volatility. So I'm using that as a guide to suggest, hey, maybe earnings is going to be a little bit of a damp effect. Maybe we're not going to see much of a move. I want to sell volatility because I don't think much is going to happen. Earnings vol tends to get bid up. And as we'll see when we look at the chain right here, as I'm looking across the days, the January 29th options expiration, so that's in 8 days, that's going to include the earnings next week, is trading around 81 vol. Whereas if we go out to Feb, we're trading closer to the at the monies look to be around 72 vol. So, it's actually not as bid as sometimes we'll see in names, but still, given where the historical volatility has tended, we think this might be a good opportunity to sell some volatility via butterfly. So a classic long butterfly is a short volatility strategy, but you pay a debit to enter into the trade. So that's really nice, in that you can go short volatility with a very constrained dollar risk amount. So in this case, I'm going to look at where we're trading right now, and I'm going to go with the at the money. So Tesla's trading around 845 right now. So if I sell the 845, I sell 2 of the 845 puts, and I'm going to go $25 in either direction. Now, you might ask, why did I pick $25? Well, that's kind of an interesting number. It resonates well. It gives me a nice $50 range, but a $50 range has a little bit more than a nice round sounding number to it. Given an implied volatility of 82 here-ish, using our trusty little formula to figure out the average daily move, we're going to take that implied volatility, divide it by the square root of 252, which is a little over 16, or come out with an average daily move of about 5.25%, 5.4% maybe. And take that 5.4%, multiply it by 845, and you get an average daily move of around $44. So $44 average daily move. If we think it's just going to bounce around a little bit right around this number, we have a $50 range where it could land in. Let's see how what we can get that trade for. So 845. So I'm going to add $25. So I'm going to go up to the 870 strike. I'm going to buy one of the 870s, and I'm going to go down to the 820 to protect me on the downside. So now I have a pretty even $25 on either side butterfly, and I'm going to pay about $3 to get into that. Maybe with some good execution quality, you can pay less. Maybe it's closer to 275 that you get in. Especially looking at actually how it's bouncing around, you definitely want to post some bids here and make sure to capture some of that volatility and spread width, so you're not necessarily just paying the offer. Anyways, we're going to pay around 250, 275 to get into this trade actually. So that would be our total debit, 275. And I'm going to show you the what if of what this graph looks like. You pay, this is actually 212 at the midpoint, but you might end up paying a little bit more. You can make almost 10x that. So if it really does sit here, it's going to make 2,200 bucks for you. Now, that is a pretty narrow butterfly. The reason it's so cheap is because it is relatively narrow, and we are betting on stock just kind of bouncing around within its range. What if I go even wider? How much are you going to have to pay for that? So I'm going to take 845, and I'm going to go $100 width. So this is so nice about Tesla. It has all this granularity, so we can go 795 all the way up to the 895. So now I have $100 range. So what are you going to pay for $100 range in Tesla? Well, you're going to pay almost 4 times that. It looks like the midpoint's around 850 right now. So to get that double the width, you have to have a debit of almost 4 times the same amount. You have that much broader of a range where you're going to make money. And I'll show you that right here with the what if. So, you could make up to $4,000 on this trade. But that said, you're paying 850 bucks to get into the trade. So it's not quite the same multiple that we were looking at there before. But you'll see here that, your max gain is $4,000 if it does land right at that 845 number. But you do have a much wider range. You make money almost all the way down to 800, all the way up to 890. So that's going to be a much bigger range to make money. You're going to pay more to get into it though. So interesting to think about risk management and how precise you want to tailor your butterfly to how much you think a move is going to happen here. So earning strategies are a great way to trade volatility and systematically staying exposed to shorting earnings, buying earnings, looking at where implied vol is trading relative to historical vol. Sets up a lot of really interesting indicators. So here at Harvested Financial, we're doing that every day. Check us out on our Twitter at harvested_DAFE because derivatives are for everyone. Tune in some great content here on our YouTube channel. Mash the subscribe button. Make sure to check out Daily Bread every morning, 8:35 Central, 9:35 Eastern. Thank you everyone for joining us. I appreciate you and good luck trading.